Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see what the chat line looks like already. Let's see, where's it at? Right there. So TGIM, thank goodness it's Monday. So that's a good thing. It happened. Monday has happened. Here we are. And you can see the dollar starting to move back down again. What do we have up there? Oh no, we have the other. That's the, yes, that's the ETF. You can see that's moving down. And where do we have it? Let's go over to here, over to J4X, take a look at the Swiss against the dollar right there. And you see that is doing, well, it looks like we'll know in a few seconds, but I would assume it's heading down. Yes, there it is. And there's the daily. You see the red bars right there like that. Pressure's on. See its white lines piercing the dotted line. And over on Chicago Quant, let's see where we are at there. Let's close this. Close. And then open. Let's see where that is at. And that is right there. And we'll see how that all opens up. But I imagine it's the same exact thing. We're going to be seeing the dollar going down in value, and we're going to be seeing the Swiss franc also going down because it's showing more strength against the dollar. And that is where we are. Now, how did we all play it out? Let's see where it's at here. Right there, and there's the Swiss. Yes. And so it closed in a sell on Friday here. Let's put that little line in there. Put that little line in there. There we go. Knew we could do that. Right there, and it went into the sell again. Actually, we didn't put the buy in there because it went into the buy on that one. Let's put that in there also. But at the same time, why traders do we not take that buy? We just take a profit from the, where's the sell at? From the sell from here. Put the sell in there too. I guess we haven't been doing that too much. We haven't been putting those sells in. And why you would take the profit down in here, that or right there, either one, take your choice. What it comes down to is that we're in a weekly sell. Pressure is on. So you only take the sells, which is right. Let's remove that. I guess we had that up there, or did I do that just now? Let's try that right there. And there it is right there. So you would take that short right there because we're in a weekly sell, but you would not try to take this long, and then you can be short again. And that short there you can. So we've been in a sell since right here in the Swiss franc against the dollar. And so you can see that pressure that's mounting. Do we have any real logic to this whole thing? You know, I mean, the noise or the information, whatever you want to refer to it as, that's come out because of the Federal Reserve and what they're doing of late. And what I mean by of late, just the last couple of days. You know, you really shake your head at it. The public in general, most of the world doesn't know. I think less and less we were talking about it. Less and less shows up on the website here every so often, and we were talking about something last week about that and the way that the fundamentals and just the whole things, and less and less is looking at an AI. It all came into the conversation of AI and artificial intelligence type of trading that they've been talking about for, I guess, about 2 decades now. Three decades, 25 years at least, ever since we had the computing power that we have now at our fingertips. But overall, the quants keep us safe, whereas the fundamentals make us crazy. Or I make us crazy when we're talking about things. So one or the other. But that is the I guess that's the rub of it all at the moment, is the fundamentals. They just don't seem to want to work. All right, let's jump over to the euro. See what the euro is up to. Go right there off of J4X to start off with. And the euro, I know it was playing. I saw it this morning. It was playing with the daily buy, or it was through the daily buy, one or the other. Yeah, you can see the strength there. You can see the white line right there, trying to pierce it. And then over here, let's see if we can do that. If we can find the right mouse, there it is, right there. You can see right there, the euro is trying to pierce through very easily. It just missed it on Friday here. You can see there that it closed at minus Z or 0.00014. and the plot 4 was 29 of the same. And so it didn't really make it into the buy, but obviously today it's starting to do it. Now we're getting some type of volatility signal out of that at the same time, so I can't wait to see what it tries to tell us what's going on. One thing is for sure, it's trying to get into a buy, and we're in a weekly buy. And obviously if this weekly buy even dares to just hit the time manifold and bounce off of it, you can imagine they're going to take out those dots that we've been staring at for months. And it's going to start to make some good highs again over in the euro, which obviously when you look at the fundamentals, you have to wonder, what is it all about? Oh, what's this? Hey, middle age, sold 2 of my 6 Augie doggies. Cool. Gold calls. 18. Oh, did it get there? Let's take a look and see. Let's see where it's at. I haven't looked at gold in hours. We did send the charts out, but I wasn't looking that close at it. Let's see, where did we get up to? We got up to 55. Nice. 55.80. Very good. Let's reload that for you. And yeah, we've been holding pretty firm in the product there. I guess, you gotta just assume that sooner or later gold has some opportunity at times. I mean, more than usual. I mean, let's put it this way, middle age, I am still amazed that it's only trading in the teens. I cannot believe, minus obviously, let's put it this way though. As I always say, if you'd have told me how the financial universe is actual in 2006 or 2007, what's that, 15 years ago, 14 years ago, I would have said, oh yeah, gold's trading between 5,000 and 10,000 an ounce. But if you'd also told me that everything I've been saying about the Federal Reserve and how they're participating in the market back then, people used to tell me that you have to wear tinfoil. Not a lot of people remember that a few of us could see that that something bigger than funds were moving the markets. We could see that the logic of the bid and offer disappeared, and we would see less retracements and less back and filling, as we refer to it on the trading universe. And if you'd have told me that now everybody knows in the open that the Federal Reserve and the central banks of the world are buyers of last resort, and said, okay, where is gold going to be? I would have said, yeah, 5,000-10,000 still. But I would have not guessed, maybe I would have, but it's a real dicey conversation or thought to believe that the central banks and the Federal Reserve would hold their foot on the neck of the precious metals. I mean, it makes sense why they're doing it. Back then, I would have thought the world. See, remember, the world was the market. The world was the buyers of last resort, not the central banks and the Federal Reserve. They got involved once a quarter. What they did, once every 3 or 4 months, they adjusted little interest rates. When things got a little dicey looking, they did repos, or they did the reverse. They bought bonds from the banks and gave them cash, and vice versa. If you'd have told me back then that we're seeing central banks plow billions like they're pennies into the to the commercial banks and trading firms for free. Remember, they're giving this money now for free to these institutions, long as they buy what they need to buy. What the banks want to buy. So we're in a really strange situation. My 2 sons are deeper into the cryptos than the average person, and I'm impressed with them about it. But at the same time, they were saying to me over the weekend, it's been falling back. It's in daily sells and weeks, and I go, yeah, I know. And they're like, is it going to bounce? Are we wrong? I said no. But I keep on trying to tell them, cryptos are not a currency. They're an asset. They're replacing gold and silver through the technology of the blockchain and the subtraction of central banks and governments overall. And that's what the problem is with the metals market. The metals market is influenced too heavily by the politicians, and which control the central banks and the Federal Reserve. And so they're not going to let anybody come in and take over their game of currency. They're not going to do that. That's why currencies trade very well nowadays and very consistent and very, with continuity. So, it's a real dicey situation here when you watch these products. And this is a currency webinar. So, we're looking at the individual pairs trades and seeing how they're trading against each other. But they don't always trade against each other. Let me go over there again, like here with the euro. We know that if they want to buy euros, they obviously need to sell dollars, right? But the U.S. Treasury, linked with the Federal Reserve, basically has a way of measuring if you're manipulating your currency. Now, I think what they mean by manipulating is not what the old concept that we knew before 2008. To us, to them, manipulation means that they are willing to buy more dollars than they want everybody to buy, or they're selling more dollars than they want everybody to sell. They actually have a channel or an envelope, that lays out how much and how far they want these products to go, and then you can see it happens in gold. So hard to believe gold is just in the teens. I mean, I'm always amazed, but that's what the cryptos are all about. They are the substitute now. So anyway, there we are. That's what it's about. I got that off my chest. Okay, now let's jump over to the British pound. Looking at the cable this morning, you can see it's trying to pierce here. Let's give that a refresh. There we are. You can see it's a little under Friday's close, nothing major, but you can see our math is trying to turn up. The only interesting thing we're seeing here at the moment is notice on the weekly, the white line is heading down a little bit, going after the, nothing major. It seems to have done some type of little topping. Let's go take a look the last time it did like a skyrocket like that. Okay, so what we did is, it did that. Let's shrink this down a little bit. You can see here it represented the beginning of a not necessarily a major top, but definitely a there it is right there. Not a major top, but just a top. And by the time it got down to the time manifold itself, you can see it flattened out after a couple of good days of selling, 3 or 4 days there, where it fell from the 42 area all the way down to the 39 area. No, 37.6, or 137.62. And it just went sideways, and then we finally got into the weekly sell here, and you can see then it rolled over more. But, actually it didn't roll over much, just like a good 1 week slide. And sure enough, it was back in the saddle again on the upside. And then we got into this point here, and this is the channel. This is that envelope that we talk about. It's keeping a very tight range, or range, envelope, channel, range, whatever you want to call it. That's what it is, and that's what they're doing. And you know that it's fed and paid for by the central banks. All right. Let's see, where do we drift from here? Let's take a look at Turkish lira. We're always entertained by that alone. Oh, it says Middle Age says also Middle Age said going to choose some of September silver calls to 29.50. Let's take a look at that. We'll take a look at the silver complex or the metals complex. Let's just go right there. All right. Yeah, I'm very upset with the way the little data came in that changed it over the weekend. Let's see, where's it at? Right there. No, that's Bitcoin. Right there. There we are. It's trying to get into a buy. You can see they threw a red dot in here somewhere out of nowhere on us. First it was a buy, then a red dot came in over the weekend or something like that. So I removed the buy line there. Then it throws it into the sell here. They're removing open highs and lows and some of the trades, and it's really weird to watch this go on. We don't have a CFTC anymore. We don't have a Securities Exchange Commission anymore. We have some type of cahoots with the central banks to keep the markets looking like they're alive and well, that type of thing. Some of the weirder things are going on there. Oh, maybe that's what Les and I were talking about. The black pools. I was trying to remember. Les, if you're out there, I saw you sent the email over. I just couldn't remember exactly what we were talking about. So it was a combination of black pools, I think, wasn't it? Let's see if he responds or she responds. All right. So we'll leave that for a second. There's something a little surprising out of silver. Why are they doing that? Keep an eye on that, Middle Age. They're playing with the weekly and they've broken the time manifold today. Be very careful with that. Could be a buying opportunity to buy those calls. If it can break down a little bit for a day or two, then finds a way to climb back up through the buy again, and we're in a daily buy, then those 2950s sound really scrumptious. You know what I'm saying? Scrumptious meaning very tasty. In other words, yes, buy them. All right, now we go over to the Turkish lira. Right there. There it is. And the daily has pushed itself into the sell again. Our poor yellow dots are missing the opportunity, but look at that. You know, it's still holding up. It closed in a weekly buy. Let's see how long they push the sell here, like maybe they did here with this big box that we've been playing with. I should make that yellow, you know. Oh, not like that. But that's pretty cool looking. There we are. I think it might only last a day or two and then they start to pop it again. Yeah, you know, we'll see what they do there. That's interesting. You know, that's an interesting situation going on there. You know what I like is I always like to buy them when they're going down, but with our math turning up. That's always the fun part. Just as we like to sell them as the math is turning down, but the price is at highs. Our math usually is ahead of the curve, so 8.5 out of 10 times it's right. So that's where we're at with that. All right, let's take a look at the euro against the Turkish lira. Right there. And you can see here doing the same thing. After being in a buy from all the way back into the last days of April. And you can see the weekly has been in a weekly buy for 2 full weeks. And it was a nice little pop. This product does have, this is definitely more accurate, but it gives us less trades. That's what it comes down to. So we'll keep an eye on it. Notice we had a little red line there for whatever reason it was last week that was floating through my little peanut brain. You can see it's obviously doing whatever we were thinking it might do. And I don't remember why we thought it was going to do it to begin with. But in the end result, it's doing it. I can see that. And so what we'll be doing is that might be sitting there by the end of the day. So. All right. Now I say we switch over to anything anybody wants to see, like always. And we did the metals complex. So we did look at gold and silver. Let's just take a look at copper. I found copper one last of the metals to pay attention to today, and that is copper has really been showing this really sloppy weakness that I keep on thinking it's going to look like this here or this here. You know, it just has that flavor, or this here. But look at the length of it. These extra couple days are making me wonder about that. You know, we've been in the daily sell since here, and it's been sloppy, choppy. But we're in the weekly buy. Now, if the green line will break down and get through it. Now, we're running a gas 5 over here. See that there? And so, you know, we're waiting for something to see if it will, you know, turn back up again. You know, someone was out there talking about all the armatures and everything else. You have to, you know, for all this electric universe of equipment, you know, in other words, cars and, you know, whatever else, you know, wind turbines and, you know, all that other stuff that's out there that's needed, you know, it's going to take a lot of copper, and we don't have the capacity to produce all that copper. That's why copper is going up in value. So, you can see there that this right here, as much as it has made a wonderful run for, what is that? That's, let's see if we can move that over a little bit, like that. You can see it's made this wonderful run from the $4 area up to the 480 area. I don't know if it can really get much selling unless we see our math roll over. I mean, this daily sloppiness, you would think after an 80-cent move that they could take it down more than 20 cents. And it, you know, it's just you know, there's a lot of pressure on the metals market to basically supply all these things that these tree huggers, I guess I could call them. I guess I like to call them tree huggers. Only 3% of the world is electric cars. Someone was saying, I saw something fascinating over the weekend. General Motors, one of our biggest car companies in the United States here, their chairwoman said we're going to be all electric by 2035, and that's almost like 13 years from now, 13 and change, and people say we don't have the capacity to have all electric cars by that time period. I mean, we just don't have the capacity. In other words, you buy an electric car, it may just sit there. You won't be able to charge it up. You try to buy an electric car, they might not have the motor because they don't have enough copper. Not that I haven't seen other products used, but that copper is the cheapest. And so, there's a lot of guessing game going on here with the copper. Copper in some ways is literally the chart of the hopes and dreams of people thinking that electricity or electrical vehicles and machines are really the answer when right now every electric car out there is basically a oil or coal-fired vehicle, and they like to call it an electric one. And I guess that's just like Adolf Hitler's tanks. I don't know if everybody knows they were electric tanks. They had these big diesel engines charging the battery. They had this big, heavy battery in it, weighed a ton or something like that. And so when something hit it like a shell from an opposing tank or weapon, it broke the battery and then the tank couldn't go anywhere. So everybody heard the diesel engines making noise, but they weren't the things that were making the wheels go around. They were powering the things that make the wheels go around, which was the electric battery to the electric motor. So there's a lot of hope and dreams for this concept, but it doesn't exactly fit when you don't have the resources. So we'll see. That's what it comes down to, is looking at the copper chart tells us what is floating through the minds of people who think that electric cars are the answer to some philosophical weather concept. It is philosophical. There is no such thing as global warming or any of that other stuff, and you can't get a scientist to sign on for it. It's just all politicians that believe in it. So I know that they tell you that there's a 97% consensus. They took 100 scientists out of 3,000 at a conference who believed in global warming. And so then they said out of 100 scientists, 97 of them say that there is. So they skipped cutting out the 2,900 that said there wasn't. And that's what there's a major lawsuit about this for years now. A fellow named, I can't think of his name, he's a Canadian that lives in New Hampshire in the United States. He does the Rush Limbaugh show. And he was part of the lawsuit. They were suing him because he told the truth. That only 97 scientists who were possibly paid to say that out of 3,000. So they always say that there's a consensus. And see, they can't say that there's science. They have to say consensus. So I know it's a little crazy, but that's, when looking at the copper chart, it's probably a real window to understanding that industry group in general. Not the philosophy of it, not the success or failure of it, but actually to the supply and demand of it, where they need this material to build what they want. So we'll see as time goes on, but I have to believe that that's going to stay firm, and copper is going to stay firm for a while, unless some political change putting the global warming people on their back foot in a sense and showing weakness. I think that's when we'll see the copper probably back off. All right, now let's jump over to the currency group again. We look at the ruble, see how the ruble's doing there. There it is right there. You can see it's flirting with the sell. I guess it went into the sell here. I think on the fact check spreadsheet we're 3 days in. No, 2 days in. This is the third day. Right, that makes sense. And we're 3 weeks. That you can see it right there. We're putting it up on the screen here. You can see that right there. And so the pressure is on the product there, which is a positive thing. I think that's almost, in some ways, this is like the window to global peace, in a sense. When you have the Russian Federation not being picked on by our socialists in America. They really don't like the Russians, our socialists. The Democrats here really hate them. They come up with really weird stuff all the time. Mr. Obama and Mrs. Clinton tried to overthrow Mr. Putin, which ended up the Crimea being annexed, I guess you could say. And so this is the window to, if this product starts to head down more, maybe things will get a little bit more peaceful, maybe a little bit more saner, because our Democrats in the United States really, really have a real tough time with the Russian Federation. They really have a problem with them. I don't know what it is. I can give you reasons, but I don't really care at this point. So yeah, I watched the ruble for that alone. And really, the Russian Federation has a lot of resources. It's really hard to believe the currency is having this much problem. But again, fundamentals don't rule the world. Now here's the yen. You can see the yen, it's popped up for a couple days in a buy, and now it's flirting with a sell. And just as the weekly, as you can see right there, is now trying to turn into a buy. So maybe this is like, that's that thing we were talking about with middle age, where you get that roll down and then roll up. Oh, there you go. Robin's jumped in. EVs are powered by coal. Yeah, I know. It's crazy, isn't it? And this is what they're supposed to hate. So they're making people try to buy a vehicle that's powered by coal and oil, but they're doing the same thing what the German army had with the tanks. So the tanks are electric tanks, the Panzers and the what was the other one? Panzers and I forget what the other one was, but they were electric tanks powered by a generator of a diesel engine. So I guess the efficiency of the electric, which has always been fantastic, and I love electric machines without a doubt, but the idea that you think you could take the world and turn it into a bunch of electric vehicles, you got to have like nuclear power plants to generate the electricity. You have to have bigger electric grids. If you're going to have more coal-fired, oil-fired electrical power plants to power all these cars, then why are we building them? You know what I mean? Tigers, that's it. Tiger tanks. Yeah, exactly. So, it gets expensive when you live in a fantasy like that. All right. Let's go over to the last of the currencies. Oh, no. What we do is we jump over to, there's the yen. And so then we jump over to the Mexican peso, which has been doing some interesting stuff. The peso is really doing well. We look at the Canadian, and did we look at the Canadian? I don't think we did we? We missed the Canadian. We'll have to go back to the Canadian. But let's look at the peso right there. You can see here, it's still finding a way to go sideways to down. Our math wants to go down. The only difference is you can see right here, we're finally flirting with the weekly buy for the first time in a while. Let's see, when did it go into the weekly sell? So we went into the weekly sell in March. And so you can see that, and it fell down. And you know what? This is a nice range. When you really look at the Mexican peso against the dollar, it's a nice tight range. It's trading in just in like the 20s and the teens. They're really small range, not like 12. It's trading at 1992. Trading down from the weekly sell of like 2050. I mean, really, this thing is 1992. This is a really nice tight range. They have really stabilized. Whatever is going on down in Mexico, it seems to be doing the right thing. The currency is looking very good. All right, and then what we'll do is we'll jump over to Canada. We didn't do Canada or we usually look at the South African rand to get a flavor. Also, we've added a new another pairs trade that we're paying attention to when it comes to the oil complex, and that is, besides looking at the dollar CAD, we look at the euro CAD at the same time, like we are with the Turkish. Looking at both the dollar and the euro on the Turkish lira there. You can see here pressure on the Canadian, right there. We're going back into the sell after a couple days in a buy from right here. We had a cute little pop for a day or two, and then it just rolled. And you can see we're still in the weekly sell, so you couldn't take the pop. You could only just stay out of its way. And you can see now we're trying to basically go back into the sell here. It didn't make it there. It just missed it. I think it did. Let's see, what's the CAD say on our fact checks? But yeah, it missed it. So we're 3 days in a buy, and now it's trying to flirt its way into the daily sell with that weekly sell. Then over at we usually look at the NASCAP, but let's do this. We're going to go to the, let's take a look at the, where's it at? Right, I know we have it here somewhere. The EuroCAD, right? There it is, right there. Let's take a look at the EuroCAD. And the euro CAD's in a little sideways action there. Let's widen that out more. In a sell from here, and at the same time, it got into the buy there on Friday, and it's just a little bit firmer there. And I think we've noticed that when this is going down, oil's going down, and when this thing is trying to turn up, oil's going up. And so then let's just take a quick look at the NASCAD, the old loony trade that I always watch. And you can see here it's trying to do the same thing as the Euro CAD, trying to go up, and you can see it's trying to bust into the daily. And then you got this weekly thing over here where we're in a weekly sell for a couple of weeks. Now I would have to assume it's telling us that oil should be firm here or up. Right there. There we go. And you can see we closed in a buy on Friday. Oh no, we've been in a buy for like 3 or 4 days, so it's been going up. But look at that crazy move here, right there. That wild move, gap down, and then it tries to come back up to close the gap. And then today we're having some issues in there, and it's playing with the daily sell. By the end of this thing is, remember, this volatility, traders, when it comes to the oil complex, for decades, not days or weeks, decades. This has a whole different genre of volatility. It's nothing for this product to go 3 or 4 or 5% in a day and almost mean nothing at the same time. It doesn't mean some major trend change. This thing is just, it just has a volatility that is not matched by anything that we see out there. I mean, it just does not do it. And so, that crazy gap down, you see they just try to literally, gap it back up again to close the gap for the gap traders. There's a little philosophy out there about gap trading. They call it gap. Like, here's a gap right there. I'm going to do like a box or something like that, or a circle. Go like that. That's a gap right there. And there's traders out there for decades. There's always been philosophy of gap trading when they occur, how to trade them, and when they gap down and you get past, you take a pivot system and you go and buy it when it starts to turn up. It has a habit of being accurate, and you can have some nice wins out of it. And so there's a whole philosophy of gap trading. And you can see here, you have the gap, and the next day you put the pivot on, you figure the pivot, and you can see I'm not confident that they gapped that, but with the overnight trading, sometimes they're subtracting out transactions. That's why we get changes in this a day later or 2 days later. Some contracts are removed or something like that. It's very odd. Like I said, it's like we don't even have a CFTC or a Securities Exchange Commission anymore following the rules. They just kind of, as long as the volume increases, and they can go grab somebody that's trying to create a pyramid, that's about all they're into. All right, let's see, where are we at? So that's the oil complex with those currencies. Now, let's see, where do we head from here? And then usually, we should take a look at Nat Gas. Let's see what Nat Gas is doing here since we're talking that. Look at that gap up. I mean, really. Look at this product. We're in the weekly buy. Are we in the daily buy still? Yeah, we're in the daily buy. This thing refuses to give up. Every time they show weakness, they come in. And we're not even in the June yet. Usually, the natural gas universe kicks up somewhere around, I don't know, you can see it kick up in July, late July, August. This thing has been lifting since like late April, mid-April. We went into a weekly buy here in Nat Gas. You can see it here. And, it lifted up, and, we went into a little sell here that was like literally at a plateau more than anything else. And once they got it back into the buy again, they're taking it up again. So the Nat Gas is showing incredible signs. I guess it's this inflation, like when we look at lumber and things like that, are trading at like $15 a board foot or $16 a board foot. We're really seeing a lot of pressure on the on these markets. For there's like this inflation thing going on. There's too many dollars chasing after too few items, I guess you could call it, or commodities, whatever you want to call it. But that's where we're at, and you can see that strength that's kicking out in it because of it. Alrighty, now we head over to, let's see, we can take a look at the gas oil, or gasoline as we call it here in the States, and see just what they're doing with that. And there it is, there is the June contract. And that is still in a weekly buy. It's got really close. And this thing has been in a weekly buy for just eons. You're looking about weekly buy all the way back into early December. I mean, look at that move. And it just does its little corrections and finds ways turning up again. And in this case here, you can see the daily is pushing into the sell today, but not any real damage there. And you can see, did it go into the sell there? No. And so you can see it's holding up. Just that big slam down, and then it's coming back. But it's in the weekly buy. And it's you can't don't count the energies out. They're like the metals in some ways, except for less controllable by the world central banks. Oil will do what it wants to do, and the Fed will. It's almost like the Fed. Oil's like Superman. It's like that cartoon character. It's bulletproof. Federal Reserve can say I don't like it, but they can't step on it the way they the way they do with the gold market or the silver market. They just don't have that power at all. All right, there's the whole energy complex. So now what we do is we drift over to the next area, and that is we look at the interest rates and the cryptos, and then we look at the stock indices, unless someone has something they want to see. So right there you can see here's the 10-year, I'm sorry, the 30-year. It was in a buy on Friday, and somehow or another that line got moved down. We're just going to leave it like that. I think it's even that way on the, we don't have it on the fact check spread, don't we? We just have the 10-year on there. You can see the 10-year is 2 days in the daily buy. And this product is trying to climb up, and you can see there's pressure on it there. We closed in a weekly sell on Friday, so it's like it's stuck in neutral. Weekly sell, daily buy, stand to the side. And then we look at the Bitcoin's been in a daily sell for, I don't know, 9 days or 10 days or something like that from here in the 55-60 area. And you can see it's moved itself down to the low 40s to 45 area. This, I think, is more tax selling than anything else. I really think that they're taking some of their money out of it. I don't see the cryptos as a currency, as I started off this webinar earlier. I see them as a new asset class, and what their item or what asset they have is the separation from the central banks and the Federal Reserve. In other words, away from government. And so that's what gold was always. Gold and silver was always the tool that when you didn't like what the government was doing, you could always buy them because they had an independence of their own. Now we don't. Now that forever, let's put it this way, for a few centuries, the markets were more controlled by individuals and groups, not by government and central banks. Okay, so you had boom and bust cycles, and you had, in other words, recessions and prosperities, growing economies, and then it goes into recession and starts over again. But now you have quantitative easing, QE, ever since 2008. And that has changed the whole world. The New York Stock Exchange is basically like a bowling alley now. It's, the NASDAQ is the premier exchange now. 6 of the NASDAQ stocks are in the Dow Jones Industrial Average. The Dow Transports and the Dow Industries and the Dow Utilities and the Dow Composite were a marketing tool for the New York Stock Exchange, who is now owned by ICE, the International Continental Commodities Exchange, International or Intercontinental Commodities Exchange, ICE, and they own the New York Stock Exchange. So we're not really seeing free markets anymore. Back then, it was the specialists and the market makers and the institutions that bought and sold, and they did it on a philosophy of what was taught at universities. Portfolio management, P&Ls, profit and losses, and reading a balance sheet of a corporation. Did they have future growth? Did they not have future growth? Was PPI, producer prices, increasing in value, or consumer prices increasing in CPI, increasing in prices or going down in prices? Inflation. We had mechanical fundamental economic things that move the markets. Those days are gone. Now we just all do quantitative strategies. For us here, we've been using a mathematical strategy for 40 some odd years. So we're just doing quantitative easing. Not quantitative easing, we're doing quantitative analysis. Now matching perfectly with the nature of the marketplace, which is a quantitative easing. And so they're following the markets how they want them to be. In other words, how strong they want the dollar, how weak they want it, how strong they want interest rates or how weak they want it, how strong they want stock markets or how weak they want it. Okay? And so it's a whole different universe. Fundamentals have kind of gotten pushed to the side. Money managers are still using them and pretending that they do exist. But I'm sure that they're not really trading as much as they would suggest. And I'd imagine that their manifestos of incorporation, which they must legally follow or they get sued, they're doing their best to stay in line with that. But it's getting dicier since now it's just central bank as the buyer of last resort. That's what we used to refer to it. That's why I always say it. The buyer of last resort was the specialist on the trading floors who controlled the books to the individual products. The trading pits in the future side were ruled mainly through the trading pits of the crowds and the institutions that traded those products, the commercials. And so now that's why the Commodities Futures Commission puts out that commercial report about how the commercials are long or they're short or something of that nature. A lot of things is that they don't always report what the option side of it is, they just tell you what the future contract is, which is not good anymore since of the legalization of trading options. It hides a long. So someone could go in and buy 5,000 futures contracts and they could have a big option position on at the same time, and they may be bears, but they bought 5,000 futures and they're long them. And so the media likes to think, oh, they're bullish, when in fact they may own something like 7,000 puts. Or they may do the reverse. They may short 5,000 futures and own like 8,000 or 9,000 calls. That's just a straddle. That is nothing more than that. It's not a bullish position. It's not a bearish position. It's a volatility position because they're putting it on thinking it's going to step out of its envelope or range or channel, whatever they're looking at that makes that decision. So. All right, where do we go from here, traders? Anybody want to see anything particular? If not, we'll go on to, we've been following the Coinbase. So let's open up Coinbase. So right there, stock, I think it is in that, right? Yeah. So let's go over check out Coinbase. And there is Coinbase on a daily basis. Now we're starting to fill in. Our math is starting to kick up. You can see it's in a weekly sell. Obviously, it's down below the syndicate bid, which is supposed to go on for 30 days. And so notice that the syndicate bid was 275. Let me put a line in where the syndicate bid was. Now, what that, it sounds nefarious, syndicate bid, but it's not. What it is they put a syndicate together of brokerage houses to float the initial public offering, the IPO. And on the 14th, wherever the product closes is where, or I guess it's where it ever opens. I think it's the opening or what they declared the opening would be. That's why it was 275. So they allegedly floated the stock at 275. Its opening trade was like 380. It ran to 429. Fell down by the end of the day to 300 and change right there. And then the syndicate bid is this line right here. So for 30 days, the syndicate is supposed to support the product. They have to come in and actually buy it. Okay? And so you can see here when we get to the edge of the syndicate bid ended right here on the, probably like the 13th or the 14th right there. So let's see what that is. That's the 13th. Yeah, it probably was the last day of the syndicate. And so you can see the week before, they slam it down and the syndicate steps up, buys it, and holds it up for a couple of days, and now the syndicate bid is gone. And so in other words, if you had like 9 brokerage houses that made it a public, floated the stock as a public company on the trading floor, that's the syndicate that has to, matter of fact, they have another name too, is that they used to have to post pictures not, of the names of the brokerage houses who floated the stock. They had to do that for weeks, and they used to refer to that as tombstones because it was just a big page of the brokerage houses who floated the stock. And so you had tombstone of the syndicate, and that was sometimes what happened was when you floated stock, you kind of got stuck with it, and it was over, pressed in the wrong direction at the beginning for supply and demand, and the syndicate got forced to own it at a higher price, and that's why they referred to the name of each of the companies as a tombstone, like on a grave. And so what you're seeing here now is you can see that the syndicate bid is done and over with, and I do believe it's just 30 days nowadays. And so you can see here it has its problems. And we've been looking at it also on a much more short-term basis of 693 ticks. You can see here, it follows the system pretty well. Goes into the daily buy right there, goes into a daily sell right there, comes out of that daily sell all the way down here with another volatility signal there, and then a buy right there, and get a little pop out of it. At the end of the day, going into Friday, they go back into the daily sell right here with no red dot at all, which is cool. That's always fun. And then you can see it was a little weak there, and then you can see where it's sitting right now, right there. So that is the nature of trading stocks. You have to, Robin and I have had this conversation. Robin was originally from the commodity side and the futures exchanges. I myself am a hybrid. I came from the equity exchanges, but ended up moving over to both. When we started trading cash currencies back in 81, 82, and then so I was put on different commodity seats because I was running an arm of a trading firm that we were doing cash currencies. And so then I met Robin in Chicago, where they had the currencies and futures. And so I understand the P&L side of it, and I understand the supply and demand and commercial side of it. And they're two different entities that make people trade those products. And then technical analysis brings them all together. That's what it really comes down to. Is the technical analysis is the thing that brings all those philosophies, that kind of brings it in as a language or a book or a coherent structure, that type of thing. So that's where we are. You can see the other crypto we're watching here is the Coinbase exchange. And then we can close that out now. And then from there, we saw the Bitcoin and the weakness in that. And so now what we'll do is we'll slide over to the stock indices. And so you see here, there's the NASDAQ. The NASDAQ is closing a weekly sell last week. You can see it's down a little bit today. There is pressure building on it. You see that right there. The daily is trying to lift up. You can see it's going through the line here. And I've thrown a green line here because if that red dot was not there, I would have this on top of it like that. But since the red dot is there, we put a green line right there. You can see the pressure is more on the downside. Now, over on the S&P 500, same situation is occurring. We're getting a volatility signal. Let's refresh that. If anything, the way it's falling down, the green dot's going to get bumped out of there. But you can see here they closed it in a daily buy this Friday. Barely got plus. Last night they got plus for a little while, and then it rolled over. And now you can see the weekly in the S&P is breaking down after how many weeks? Since late March. We're getting into a sell in May and go away situation. So the pressure is moving into the stock indices. Now sliding down to the Dow Jones Industrial Average, same situation. You can see it there. It's still minus by the hair of its chinny chin. It's starting to show a weekly sell this week. And at the same time, the stock indice, not sure why a red dot is there on Friday. It was not there. But in the end result, let's give it a refresh one more time. Maybe it'll chase that away. They've obviously pulled something out of it. But in the end result, as you can see, it was up and it is down now. And they're having an issue about holding up the stocks. I myself think that they're going to take them more down. But they're not, and nothing's going to move in a straight line. They took it down last week. You can see this was last week's move. And, from the daily sell right there, and it just, they pressed it down and then they bounced it up, and I would say that they're probably going to press it back down again. It could be And it could be a combination, stock selling for being able to pay your taxes. You know, it's an asset that people have. Same thing as the pressure we're seeing on the cryptos. Cryptos are assets, and people need to get those assets to be able to pay their bills. And that's usually the way it works. All right, now last of the stock indices we watch is the Russell 2000, right there. And that closed in a weekly sell 2 weeks ago. And you can see there, gave us that nice, I guess we were in a sell from here, and it stayed in the sell all the way down to, not there obviously. That green dot wasn't there last time I saw it. I don't know why it reappeared, but it did. No more than an hour ago it wasn't there. Matter of fact, I think I have a chart of it showing that it wasn't there. I think we sent it out. I might even take a look at that just for curiosity. Where is it at? You'll see it with me. I'll put it up on the screen. We'll see it together. Is that it right there? No, not there. All right. Where is it at? Not there. There it is. I found it. Okay, now let's slide down and open it up. There it is. Yeah, see? Right there. Now you see it? And then this morning, it wasn't there. And now it is. No idea what goes on. They're pulling volume out of this thing or changing numbers. This is coming straight from the exchanges, so you know you can see it right there. The product was, let's see, right there. Can you see that right there? Let me see if I can do it with the mouse right there. Right there, there it was. No red dot. Now there's a red dot again. Sometimes I just leave them in there when I do that. I hate when they do that. So that's where that is right there. But end result is, so I'm going to go back to that and leave it there where it belongs. And just pretend that red dot didn't exist, because it didn't exist. So, and it was right. It's telling us that the strength is trying to come up. But, same token, we're in weekly sell. So how much life can this really have? And it's obviously down for the day like everybody else is. You can see it's got that red thing right there going on in the line there. This thing may, by the end of the day, start to head down, and the arrow will break the time manifold on the daily. You know, it's already in a weekly sell. There's pressure on this product. And, you know, like I said, there's tax selling going on. There's also, you know, sell in May and go away. There's all kinds of things. The only difference, traders, than what we've seen before is, you know, and what I mean by before, the last couple of years, is the volatility funds are gone. They got blown out in February, March of last year. And I've been trying to explain that to everybody over and over again. And that is that I remind everybody constantly, because they were the ones that created those 1,000-point days up and down in the Dow and the rest of the markets. So in other words, we saw the Dow Jones Industrial Average going up or down 1,000 points in a day, sometimes 1,500 points in a day. It was because there were 5 volatility funds out there selling premium, and they were trapped. And when you sell premium in a product, you're selling naked premium. What you need to do is if you're short premium in the call side or the put side, on the put side, you need to sell short stock. And at any price you can sell it for. There is no magic of, oh, just put the offer out there and we'll wait. No, you'll go out of business that way. And so what happened was they got pushed out of business. 3 of them, I think, went bankrupt. 2 of them were able to close their doors, never to do that stupidness again. And so that's where we are with the volatility. It is diminished. It has diminished. And when we, let's see, I think we can, why don't we open up the volatility chart too? We're going to open up a volatility chart, and you're going to see, I saved one, so I don't have to put up on a screen. Where's it at? This is from my weekend look at the volatility chart. Where are you? I'll find it in a second. There it is. Here it comes. See how quiet it is now? Now we can't, if I put up a live chart, we can contract it back to when the volatility funds were in business of March of 2020, not 2021. They've been gone for a year now. And from that, maybe I should open it up for, you know, for academic reasons alone. So let's get rid of that. And then let's open it up here. It could be a good thing to match up to the stock indices at times. Let's see. So where is it at? Right there. or better yet, we'll do it where I do it with my weekend work right there. There we go. Let me just close this since we're not using it now. Close. There we are. There we go. And so, let's see, where are we at here now? Oh, okay, so we want to go to there. So, what you see here is, and that's the Dow Jones Industrial Average we're following with our green and all those. Remember all those things I was talking about? The let's see if we can contract that and you'll see them. All those new wave signals. We got all those new wave signals through this whole lift. And now we've stopped for the last 2 weeks. No more new wave signals. Never seen so many. 7 out of 8 in a row. Over 90 years of back testing and everything else, I've never seen that many new wave signals. To me, I thought we were going to see some interesting volatility in a not necessarily wild volatility, just the marketplace that was going to bring it back down to, say, the 32,000 area, something like that. And we may. In the end, in July, we may be sitting here going, it's at 32,000 now. And I'll put this chart up there and say, see, this is what I was telling you about with these volatility signals. So we had a bunch of them. We had 5 of them at the bottom of March of, I don't think we can get it back here, March of last year. Right back in here when the Dow was at 25,000. So, but in the end result is, let's go to the volatility chart itself again. And there it is right there. And when we contract that, like so, once those funds were put out of business, we didn't get that insanity anymore. Now they went out of business in here, right there. That's when they went out of business, right there. That move was so beyond their abilities, it just put them out of business. So by April and May, going into May, you can see it's basically been in a channel between the 40 and the 20s, okay? And it's all died down. There might have been some small funds that weren't as stupid, and so they had to slowly unwind them. And you can see here now, it's just, even with the action we had last week, you can see there's no panic to it because they're not going to swing. In other words, the COVID sell-off that we had in February, March, which we also had 5 new wave signals in January and December from it. They gave us a warning for 3 weeks that we were getting something that was getting crazy. And we had 5 signals in like 3 weeks, and it's like, wow, 2 indices and 3 indices. One week, I think we had 4 or 5 indices. It's written on the chart there somewhere. We'll go back and look at our history one day and maybe put it back up there for you to see. So the volatility is not going to be the same as it used to be for that specific reason. Those volatility funds don't exist anymore. And when they get in trouble, the only answer they have is to go short at any price. So they were selling stock short until they went bankrupt. And that's what they did. They went bankrupt, 2 or 3 of them. The other 2 were closed down. They lost money, but they closed down. They had made billions, these volatility funds, over basically pretending that the Federal Reserve had a put out there. But with COVID put more pressure in the marketplace beyond the Federal Reserve, and the Federal Reserve just had to grin and bear the wild volatility. Trust me, I'm sure they did not want to see 33% drop in the stock indices over a 3-week period. That was not where their heads were at. But they had no choice. The funds themselves were selling the daylights out of it, and they had no power of stopping them until they ran out of cash. And they lost all the billions they made. That's what it came down to. So, all right, traders, that's enough for us for today. Happy trails to all of you. Happy trails to you. Until we meet again, which will be Tuesday. Happy trails to you, to all our trading friends, and the Cyber Pit. Later.